when you get a gap move on a candle, that's pretty much letting the cat out of the bag. So when you see the time frame, inside here it's hidden. There's a lot of whippy action, a lot of overlapping price inside areas like this. But when we get something like this, and now the monthly people that are looking to hold opportunities multi-month have seen that. And now that they've seen that, they're trying to figure out, do I stay? Do I keep holding? Do I back off? What am I doing? And then that's why we could get a pause, and that's why you get movement like this on the 4-hour. The fact that the 4-hour has had an established fair market value right here after the last big run. It paused, it traps people that are long, traps people that are short, and now everyone's figuring out what's going to happen. The reason why we get multiple expansion legs like this, right here, we pop out of the box, then it comes back over to the top of the box, down below the box, above the box, down below the box. This is what we call a multi-leg expansion. It's part of the master pattern second phase, the expansion phase. The reason why this didn't just keep going down is because the time frames above the 4-hour have not decided to short, to either sell their buy positions or enter new short positions. Because the reason why that is because anybody over the 4-hour chart is going to be looking for the market to sustain a direction for multiple of the candles that they're looking at. So really above the 4-hour chart is really the daily, right? So anybody looking at the daily, when the price came down and hit these price levels, in mass, the daily was not convinced, those people on that time horizon, that they should either sell their long positions or get into new short positions. Neither the weekly nor the monthly. So what ends up happening is that without that longer time frame commitment, you end up in a situation like this where you have only 4-hour is the top holder, 4-hour time horizon that is trying to see if it's going to keep going, because the daily hasn't made up its mind. The weekly and monthly still aren't budging. So what ends up happening is you could think of these like little mini Ponzi schemes. As the 4-hour trades down and it doesn't recruit higher time frames, the interest on those levels, then the 4-hour trader, the shorter term speculator, starts to get a little nervous, like, who do I hand off my trade to? Remember, we're all traders. So we need to get inventory. We need people to come in ahead of us, and then we need to sell it for a profit. Without that stacking of new people coming into the market, we have nowhere to offload that inventory. Everyone has the same problem. So when this happens and we don't recruit the higher time frames on the breakout, there's nobody with longer staying power or a longer time horizon to stabilize the price. So when a 4-hour chart looks like it's topping out and it only is captured 4-hour interest, then the 4-hour chart collapses on itself. That's the way it works. Because nobody here on this breakout has over a 4-hour time horizon. And the minute that the market comes down, it tests the bottom right here, and then you get a move like this, they're like, okay, never mind, it's done. So all of those, it's like fixed and floating stock. The floating stock is only accessible up to the 4-hour chart right now, because that's the expansion one. And it's accessible on the lower time frames. That's where you're going to get more moves that are actually trending. Like in these environments right here, this 4-hour climb. There's a lot of good 5-minute trades, good 15-minute trades. So those time frames are still like active as far as trending. On the bigger time horizon, we're still in just a multi-leg expansion, right? So anyway, hopefully that makes sense. That's a big thing that you guys need to understand about the expansion phase, is that when you're in a multi-leg expansion, it's all about price exploration and it's about recruitment of the higher time frame. That's the only way you're going to get it to keep going, to keep traveling. You think about this based on what I just broke down right now. If we're all looking for a big trending move, right? That's what we want. If we're in a multi-leg expansion and the only way that it's going to sustain and going to move away is if we recruit the higher time frame. Why? Once again, very simply, the higher time frame speculator will hold their stock or their inventory longer. They're not going to be willing to sell it because they're simply looking at a different pattern, a different time frame pattern. So they're going to be willing to hold that longer. When we get up through here and they don't take, or we get down below, they don't take, we come right back into the center of the range. So the way the basic strategy works is that we're looking at these higher time frame directions. Let me jump down to the weekly real quick, see what's going on there, because that'll be a little more relevant to the 4-hour. So if we're trading based on going long below value, so this is our discounted price area below this line, we are betting on essentially that the higher time frame recruitment that we need in order for it to move away from fair market value is going to happen in this direction. That's our inside information, right? We need that weekly, the daily and the weekly, to jump on board to kick the price forward with longer time horizon holders so that it doesn't collapse back on itself, because we're just basically trying to speculate each other on the same time frame. That's where you just get it climbs and it collapses, goes down and collapses back. So the way that we have formulated the basic strategy, which is trend direction like this weekly, and in this case 4-hour, you're looking at the weekly direction is going up. It's above the ATS trend line, and we're trying to accumulate discount inventory, and we are waiting for eventually, when the likely time comes that the price will get above fair market value and finally re-recruit the weekly to go on its next run and break through this high. That's essentially what we're waiting for. A lot of people will ask, well, how do you know when it goes in the trend phase? How do you know? Like, they really fixate on that detail. Like when I need to know when it's going to, we don't know when it's going to go in the trend phase. We don't know. All we can do is prepare and accumulate inventory and wait for the probability and the likelihood of it happening. And then we cash out when it happens or before it happens. That's the entire point of accumulating your inventory under this level, in expectation that the higher time frame recruitment that we need for a significant move will happen in the existing overall direction. And why would we expect that? The ATS trend line shows us the inefficiencies that kick off the moves on those higher time frames. Granted, this one's been a while, so we probably could be getting closer to a rotation on this time frame. That's definitely a possibility, but for the moment, it's still long. So every single time you get below fair market value in that confirmed direction, you see this? Here's your contraction. Here's your expansion. Your discount accumulation happens below this line. And here's your higher time frame recruitment right here, right here. That's your higher time frame recruitment. And then it stabilizes into a new minor framework, stabilizes again here. So all we can do right here, you're below value, that new established value, you accumulate, you wait for the higher time frame recruitment. Boom, there's your trend phase. So we don't know when it's going to trend. It could have 2 expansion legs. It could straight break out of a gray box like it did right here. It could have 10 expansion legs, back and forth, like in a situation like what we're doing here. The point is to safely accumulate under fair market value. It's no different than looking at a real estate market and understanding that a neighborhood overall is appreciating in value, but you're looking for those discounted properties, the fixer-uppers, those ones that you can accumulate, that you could, in real estate, they're adding value to the property because they're fixing it up or whatever. We're not really adding any value to a position, right? So we're purely looking at price. So we know that essentially right here, this tells us the neighborhood is going up in value, right? This tells us what the fair price is currently. What we want to do is we want to look for houses that we can buy under that fair price. And we're expecting when that price appreciates that we're going to offload that inventory. Same thing. So does that make sense to everybody? If I get some floating thumbs ups over here. All right. Okay. I haven't lost anyone. This is what I'm talking to you about right now is a very key concept of what we do here. You'll find that really everything that we do goes back to the basic strategy. Our edge is really 2 things at the core. It is understanding that the neighborhood is appreciating, the higher time frame. That really is our trade, is over here. So we understand what direction that's likely headed based off of the inefficiencies it leaves behind. And the ATS trend line is making that idiot proof for us. Just shows where it is. Okay. That's where we're looking to go. And we are looking to accumulate our shorter term trade inventory above and below value based on the trend direction. And what I explained to you is that we don't care about when the third market phase happens, the trend phase. We know it's coming. It's 100% coming. But the only thing that we could do is prepare for it. And we prepare for it by accumulating, in this case, our inventory under value, where we're going to have the lowest risk and highest reward when the inevitable higher time frame direction likely kicks in. Now, if it doesn't kick in and it starts going down below, well, we're going to be looking at ATS trend right here to see how it interacts with that line, to see, okay, maybe we need to dump this and we'll take a loss. Wait for the market to reset, do it again. A lot of traders favor confirmation over trade placement. Confirmation being, look at it's breaking out right here, and then boom, they get smashed. Look at it's breaking out again right here, boom, they get smashed. We prefer our confirmation comes from over here. Simply that the higher time frame wave of money, the interest, is just generally floating that direction. That's really our confirmation. This right here, this line allows us to jump in when others feel scared. We have this line right here that gives us a grounding price point that we know is highly, highly magnetic. It's highly magnetic. So when we accumulate, because we see this line and we know the meaning of it, why it's there, why it's called fair market value, it's all based in logic of how price action works. When the market comes down, we have a different feeling in us when we throw that first small position in at this level or at this level or even at this level. We have a different feeling because we know that there is a very sound gravity pull coming to this price level right here. And we know that even if we're wrong, there is a pretty high likelihood that we're going to visit that level multiple times to put us in the money. And then when we get in the money, what happens at that point? At that point, when we get in the money, we are now getting further away from our pain threshold, which is the ultimate reason why traders lose, is simply because they put in a position too big and they don't give room for their pain threshold. They immediately get out of the money. It hurts. Ouch. They close the trade. Guess what? It is a systematically booked loss over and over and over again. So when we trade with smaller positions initially, when we buy under fair market value in the direction of the overall higher time frame, we are accommodating for not only our pain threshold that we can't do anything about. I don't care how robotic you think you are. You need to account for it. Everybody will get uncomfortable if they're losing money, right? So you account for that. You are getting, on a technical basis, you're getting inventory under a fair market value that was agreed upon by buyers and sellers. This box would have not appeared if buyers and sellers did not agree on fair market value. It's the mechanics of the price action. So you're accumulating under that line. You know that you're getting good inventory. And then the rest is really the three market phases playing out, that this will eventually carry you into a profit above this line. Also, we have a fair market value above this line. It'll eventually carry you into profit. And then you will see when you get to this line and above how long you want to hold for. Once we get above those lines, that's where order block projections come in. That's where previous liquidity lines come in, previous institutional level lines. That is going to be skill and intuition, where you think it's going to go. You could be looking at higher time frame projections on the weekly. Like we have an order block projection right here. Good chance we could reach up to that. That's kind of like, that is, for lack of a better term, that's really the gamble that you are taking, is once we finally get above this line. ATS software and the methodology is only designed to get you good inventory with a high likelihood of getting away from your pain threshold and back up to value so that you can see what happens. That's it. We're just trying to give you a way to stay safe in the market so that it extends your time in the market, which ultimately time in the market is what pays. Everybody that is actually doing well on crypto and doing well on stocks and all these things are people that invested money that they really didn't care if it went down or not. They were able to just sit on it, and they bought more and they bought more and they bought more, and they eventually averaged in, and it's eventually that time is what worked for them. That is how Warren Buffett's made his fortune. So we are trying to mesh market timing, expert market timing, with time in the market. And our time in the market is based on the higher time frames. We know that if we were trading the 4 hour into the weekly, that we could be in this range for multiple weeks because our trade has to happen. Our trade will be considered complete when we see the recruitment of the weekly chart take place in this setup. So it's everything that I'm talking about here is based on a logical fact about how the markets work. It's simple. It's not easy. It still takes a lot of discipline to wait for the correct setups and to do that. And even after you do that, you will be wrong sometimes. But you guys will find that if you're having a difficult time or you're on a big losing streak, it is likely because you're either trading too big or you're not patient to align yourself with the correct market positioning. You see something like this, you're like, this has got to be the breakout, and you're falling victim to the confirmation over quality trade placement thing that most all traders do. That's why you're struggling. Then you're going to go right back down, fair market value, and you're going to get scared. And same thing, your pain threshold is going to kick in. You're going to close a trade and book a loss. Everything that we do here is opposite of what the normal mentality is out there. That's why you got to feel unafraid to pull to start accumulating your inventory under this line. That's why instead of going after crazy unrealistic gains and leveraging your account to the max, you are okay with having a small position here, small position here, small position here, small position here, because all you really care about is, going back to the real estate analogy, how many houses can I buy under this line? That's really all you care about. And then I'm going to let time take care of the rest. And I'm not going to sell my inventory until the fundamentals of the higher time frame turn on me. That will be the determining factor when I sell.